Hey everyone, welcome back to the IT Investor Podcast, where we help tech professionals turn their income into lasting wealth through real estate. I am Pramod Gudishetty.
And I'm Wally Taylor. If you're logging in because you're working long hours in tech and wondering how to make your money work hard for you, then you're in the right place. We're all about helping you go from code commits to cash flow.
Today, we are joined by an incredible guest, Divya Smith, a seasoned technology executive who has worked at several Fortune 100 companies. Divya's story goes beyond corporate success. Her mission is to empower busy professionals to gain more control over their lives through smart, diversified investments, especially real estate. She is currently invested in opportunities with over 200 million in assets under management, and she is to share how you can start doing the same even if you're working full-time in tech.
This is going to be a value-packed conversation. So whether you're just curious about real estate or you're ready to deploy some serious capital, you don't want to miss this one. Divya, welcome to the show. It's such a pleasure to have you here. How are you doing?
I'm doing good, Wally. Thank you so much. And Pramod, thank you so much for the introduction. I'm glad to be here. And like you said, yes, I'm a technology professional. With over 2 decades, I have spent in technology. I've worked in big corporations like Target, Hilton, United Health Group, and US Bank. I started out as an engineer, and I love the fact, Wally, your introduction starts with a code commit. I just want to share that is where I started. My undergraduate is in computer science. And then from there, went all the way into leadership roles, leading, teams as large as 200 employees. I've had some really fun roles and exciting roles. At that point, I really did want to make a bigger difference. So for me, it became a purpose and a passion to want to share, especially with my technology community, with how to continue to build their wealth, but then also figure out ways that would help them build it passively. So that's been really exciting space. Pramod, you shared 200 million in assets. Thankfully, we just crossed 250 and we're super happy about it. So it's the group of investors we have today. We have over 400 investors working with us. So it's been a really great space. And thank you so much for having me. I'm really excited to kind of talk technology, leadership, real estate, all of it together with both of you.
That's awesome. I love the energy. Awesome. We're really looking forward to this conversation. I know I'm personally grateful to you. You may not realize this, but I participated in my first 2 acquisitions last year with you, in a deal in Dallas and a deal in Greensboro.
Yes.
You were a great mentor for me, and you don't realize that, but you really kind of helped me as I've started my path down that investor relations GP role. So thank you for that. You have a unique blend of corporate experience and real estate investing, and we just can't wait to dive in with you. You did already kind of mention your background in tech. So I have kind of a question, 2 parts here. You've held some leadership roles at companies Target, US Bank, Hilton, and now you consult as a fractional executive. Can you start by telling us what that is? That's kind of a newer thing in the tech space. And
Yes.
Go ahead. Yeah.
Yes, absolutely. So fractional executives, I think it's one of those fancy words that just everybody's calling it now. For me, that was a part-time executive consultant. So I called myself executive consultant for a long time. And it basically, end of the day, you don't go from being a technologist to being 100% real estate investor. I think my heart is still technology. I'll always be a technologist. So what I have started to do is working directly with some of the companies. So I worked with Cigna Healthcare last year. I worked directly with their CIO. They had asked me to come in and consult with them as they were opening up this large office in India, in Hyderabad specifically. So I helped them open that up, work directly with their executives. So that was one partial role. Currently, actually, I am taking on a potential fractional CIO role along with a board member role. Now, just to kind of clarify, real estate is what I spend 60 to 70% of my time, but some of these fractional roles are 5 to 10 hours a week. And for me, they just kind of get the enough itch that I have with technology just handled and taken care of. Because at the end of the day, the intellectual part of technology, that is still super exciting to me, but I've chosen to do that in a part-time capacity over a full-time role.
That sounds really exciting that you can do both at the same time.
Yes.
What kind of inspired you to pivot? Just no longer want to be a full-time tech exec. Let's take a look at real estate investing. What was that inspiration there?
Yeah, so I actually saw one of my friends from college. So her and I both did MBA. This is year 2010, 2013. And then between her and her husband, they both are executives at a large company like P&G, and they both had quit their job. And instead became full-time investors. One, because there was some additional family needs that they had, and they wanted to take care of their aging parents. And for me, that was just incredible to watch that real estate helped them do that. day in, day out, what I would see in my job is there's a lot of people who loved some part of technology, but not all of it. I really wanted to be kind of in that space where people were spending their time doing what they loved and what they were excited about with the people they wanted to do. So for me, that became my purpose and passion. And I wanted to kind of bring this to my community, especially technology and engineers in that space. And one of the things that I realized, and I would love to hear some feedback from you both, is every time I would ask my peers and leaders around, hey, like, what are other ways to invest? The answer usually I got was, hey, just get a financial advisor and that should handle it. So for me, that became really difficult as I even researched. I talked to 7 financial advisors within last 5 years, out of which I finally went with one last year. And funny enough, of course, they were doing some stocks and I was doing my own stock management. They were able to give me decent returns, like 14%, but then they took a 1% fee, so 13%. I, on the other hand, just monkey in the mix, right, doing it, and I got 19%, just barely doing much, right? So I picked like certain stocks and like didn't even look at them for a couple months at a time, made moves here and there, not even actively managing it. So for me, that was kind of aha moment to say, hey, like the stocks is something I can manage myself, and I like there has to be more diversification, and that's where I diversified in real estate. So long answer, but I would love some feedback, like as in your jobs both, when you have looked out for other alternative investment options, what have you heard from folks around you?
I can take it first, if you don't mind, Wally.
Yeah.
I mean, pretty much the same it was, go and talk to your financial advisor or just invest in stocks or bonds. And I definitely don't see stocks would lead you to financial freedom or anywhere, given that every 5 or 10 years we have a cycle, right? I mean, there's always a up and down, lots of variables. It's very uncertain. And I personally had big losses in the stocks. Not as lucky as you were. I realized you got some 19%, but I wasn't meant for stocks at all.
Yeah, Pramod, just clarify that's unrealized. So that's, and I haven't sold them, but like that's the unrealized. So you don't really make money, right, on stocks, but, and you're right, they go up and down so much. Very volatile, very hard to predict. But yeah, Wally, go ahead.
I was just going to say, I mean, most of my peers, it's all about the K and your Roth IRA and just putting money into the market. And like you both just mentioned, that volatility, that's not something that I'm super excited about. I like things that I can control and predict a little bit better. Obviously, real estate being a more stable asset class, yes, you will see changes in pricing, but it's not something that changes and swings rapidly from day to day or week to week. It's kind of a longer buildup. I will say that I am a bit of a Bitcoin maxi, but that's kind of my own gamble. I don't recommend that for everybody. That's definitely a higher risk asset class, but I do see that as a good, interesting store of value. We won't go down that road though. We're not on that podcast.
Yeah, yes, yes.
Yeah. And adding to that a little bit more, it's interesting that nobody talks about real estate advice or anything. I think it's because this is way how we are taught, and how, what you see outside is just here 401ks and stocks, right? And I actually felt that this is bad, and that's the whole reason why myself and Wally, we thought of like educating our friends and family or other people how to build wealth, right? That's why we are here today.
Yes, absolutely. Absolutely.
Yeah. Okay. Having said that, I would like to ask you more about your company, Divya. I know your company is Ascending Avenue. So can you explain how investing with Ascending Avenue works and why it may be better than investing directly with a syndicator as an LP on a deal?
Yes, absolutely. Pramod, great question. So a couple things to share, so there's a lot of operators in the market, and there are people who are actually working on these investments. So just to kind of give an example to your listeners, it's, let's say we're buying a large scale apartment building and we are rehabbing it and then we are selling it for profit. So those are the type of investments usually that I'm bringing to my investors in Ascending Avenue Investments. Now, these investments specifically, I have gone out and vetted myself. myself. So I'm going to put my money into this deal. So every single of the investments that I bring to my investors, I'm putting my own money into it. I'm excited to kind of share the research and the work that I have done. So if you were to kind of do directly, let's say with some of these operators, I think the part that you would end up missing out is the background and reviewing the deal itself. And if it makes sense, you end up missing on that. So that's the first thing, kind of the extra due diligence that somebody like me who brings these specific investments. The second thing would be is because I have a big pool of investors coming along with me, there is different classes of investments. So let's say a class A, B, or C. A would be somebody who's just doing a debt investment, wanting to look only for, let's say, a 10% return month over month with no upside at the end. Class B would be somebody who goes in and directly invests with an operator. But then if you're investing with 100,000 or 50,000, you're getting a lower return. But let's say you go in together with $500,000 or $1 million, which is kind of where I come in. I'm usually bringing in investors at that bigger, larger scale. You get higher returns. So that is kind of why most of the investors like to go along in a bigger group, because you're getting better numbers without really having to do any additional work yourself. And these are additionally vetted investments that are coming to you.
Yeah, well said. So this is mostly like a fund of funds model looks like, right?
Correct. Yes.
Okay. And further, let's dive a little bit deeper into this investment. What type of properties do you invest? I mean, what type of assets? Is it like storage, multifamily? What type of assets?
Yes, of course. So majority of the ones that we get are multifamily investments, Class A and Class B. I have not looked into self-storage too much yet. I know there's some conversations about it. I'm still personally a little hesitant only because I think I am a minimalist. And for me, the idea of self-storage is just kind of out there too much. I know it may make sense business wise, but my values just don't let me kind of want to put that out there when people should be reducing all the stuff that they have. But I do end up focusing primarily on Class A and Class B that require updates. So to give a couple examples, we bought in a really nice suburb of Dallas. It's called Highland Park. So it's a very nice neighborhood. Actually, a lot of big folks live there. People who are really wealthy tend to live in that area. So we had an apartment opportunity there, filled up very quickly. We had another one in North Carolina, which is also a really nice, booming market. So that's another place where we looked. Both of them were Class A, but the one that I'm also doing right now in Charlotte, North Carolina, a seller has owned it for 25 years, did no updates whatsoever. So those are the kind of opportunities we are looking for where they actually have not done updates, and we can go in and make those updates. That allows us to really give that value to our investors. Value add, of course, is a common word, but I think even dissecting that word a bit more carefully to understand when you say value add, like how much value is getting added, how much rent can be increased, and is it in the right area or the neighborhood of the at that specific region?
It's really interesting. You mentioned that you're operating this fund of funds model where you're primarily, you do your due diligence obviously, but you're working into that investor relations space. Why did you choose to adopt that particular GP role versus operating in a different position as a syndicator?
Yeah, Wally, I love that question, and I'll tell you why. I'm in technology, and in technology, you figure out very quickly what your skill sets are. So I've had teams where for a very short time period, I ran operations. Could I do it? Yes. Was I good at it? No. So for me, I learned very quickly, and this is even through technology, is, even within technology, some of us kind of go towards data analysis, which is, you and Pramod. But then I focused primarily on building, so like development specifically. I couldn't do operations or security or infrastructure. And I think there's a lot of us kind of talk through all different roles. I've done them, but I'm not at them. So I think being in this space, it's very critical to identify your strengths and kind of leading with those strengths. So for me, my strengths were primarily, understanding the details of what the investment was, identifying if it's a good fit, but then being able to take it and explain it to different types of investors in kind of their speak. And that's always been my strength, being able to kind of have that communication, be really strong at it. But day in, day out operations, understanding, managing the KPIs that go into property management and asset management, that was not my skill set. So that's why I kind of picked this specifically.
I was just going to say your people skills and your communication skills are, awesome, top notch.
Thank you.
Like so far, you're my favorite guest so far. I'm just going to say so.
Yes, I totally agree. Okay, now let's look at how do you select the right operator to work with, which is very crucial, right? And what
Yes.
criteria do you use when vetting these people?
Yes. I've learned the hard way, Pramod, I would say, is my first investment I did with folks who didn't have in-house property management or construction. And I think that kind of bit us a little bit because the reaction time is just slower from, say, operators who may not be as experienced, but then also slower because now you're going through a third party. In technology, very similar and actually almost always correlated back to it's you working with employees or you working with third-party consultants, and especially third-party consultants. And see, I'm going to name drop here. It's not KPMG or Deloitte, but you're working with those other second or third tier technology companies. And so the level of service, the level of reaction you're looking for is slower. So for me, the partners I look for now, having integrated property management, integrated construction company go a long way for two or three big reasons. Communication, as we talked about, quick return time for any conversations, any issues that are impacted. And third, it's the cost as well, because when it is fully integrated, the cost is much lower because you're kind of making that profit holistically.
I guess it's my turn. I have to totally agree with you on that one. Absolutely, Divya.
Awesome.
You mentioned you had some learning experiences before working with the current operators you work with. Have you ever had to walk away from what you thought was a really good sponsor or an operator, or even just a deal where you thought it was great to start out with, and then maybe a red flag popped up and you had to say?
Great question. And I've done that multiple times. And I think one of the things that we all in this space continue to learn and we need to be comfortable. Even if I've invested 5, 10, 15, 20 hours vetting a sponsor and understanding what they do, be comfortable walking away, because end of the day, I don't want to put my own money, let alone my investors' money, in a space where I'm not comfortable with these sponsors. And some of these sponsors, you have to do the due diligence, and until you do enough of it, you don't even start uncovering some of the issues or things that may not be aligned. So that's one. Experience and skill level is one. But then the second for me, which is a big thing for me, is their values and their ability to communicate openly and transparently. That just goes beyond for me. So that's been my value from day one when I started working. So I want to pass that along to every investor and every sponsor that I work with.
We had a conversation recently about doing that due diligence on a sponsor. I'm curious how when maybe you're looking for new ones, or like, what are your resources for learning about? Because everyone's got a website, right? And they say all these great things about themselves, but like, how do you actually take a deep dive on somebody and really get into some of those details?
Yeah, great question, Wally. So a few things I would say. I think first one for me, which has been a red flag already in a few that asked me to work with them, but then they weren't available. And I think getting a hold of them, I think them being responsible or communicating even consistently and getting back to you in a reasonable amount of time, for me, that was critical. The other thing is you can do background checks on all of these sponsors. So you can go ahead and kind of do financial background checks on their companies, on them as people. So yes, it's additional cost, but I think it's worth it in order to be able to kind of assess the sponsor. And then finally, like, you'd be surprised, at these real estate conferences, like you and I were talking about before we started recording, going to these conferences, a lot of people have worked with some of these sponsors and just asking for their experience, what has worked, what has not worked. There's a good reason to go to some of these conferences. It's to learn about what are good operators in the market. And there's not many left at this time because the market has been tough. So those are the three ways I would probably say to kind of look out for.
Those are great tips. Not to change it up totally, but we're going to stay on that subject of risk. What risks should investors be aware of when investing through a syndication? And like, how do we manage and mitigate those?
Yes, that's a great question. From a risk standpoint, this market, so it's one of those triple whammies, if not more whammies coming together. It's probably been one of those worst time in the last 3 to 4 years. Things that could have gone wrong have gone wrong. Interest rates going from 2% to 6, 7, up to 9%. Mortgage rates kind of going high. Then the cap rates have squeezed dramatically. So that has gone down dramatically so that you cannot really even sell the property. The insurance cost dramatically have gone up, doubled to almost tripled. So that has happened. Property taxes, those have gone up dramatically because the housing and the prices went up. All the big factors that could have gone kind of the sideways have gone sideways in 3 to 4 years. So now in the space that we are in, to work with these specific operators, asking about those 3 or 4 things. How do you manage, high interest rate? How are you showing up the right cap rate? Your increase that you show as far as insurance cost. What increases are you projecting for in your performa as you go through for property taxes? So thinking through each one of those as how they have planned and projected for it for next 3 to 5 years is critical. I will share with you, there are some underwriting that I've seen for some of these properties, and they are not projecting any increase in expenses, but they are projecting an increase in rent that they will collect. And you just can't do that. Like, that makes no sense. For me, I almost want to see, hey, let's say the rent, instead of projecting 3%, which has been, the default number for a while, let's say your rent only increases by 1%. Is your property still profitable? Because as we are seeing, the rents are really starting to flatline, and they have been flatlined for the last couple years. So those are specific questions I would ask as vetting a sponsor.
Yeah, that was a very good answer, Divya. And I personally purchased from last year, experienced myself firsthand, where after you buy a property, the property taxes also would increase because change of hands or the company, right? Which is a big one. That was definitely an eye opener for me, at least.
Yes. Yeah, it's very interesting, Pramod. You mentioned it, and it actually happens in residential too. So, of course, my neighbors, right, they'll come and ask. So, the house right next to me has sold now twice in the last 5 years. Their property taxes keep getting reset to the sale price. So, it's very interesting to kind of think about the property tax every time you get a brand new price, because now the county has updated price. You can't have those homestead exceptions. And I know those are for residential, but even for commercial, like, they don't want to increase it by a certain percentage. But it all gets reset when the hands are changed with who owns it. So as soon as somebody new buys it, now you're getting a brand new property tax statement. Yeah.
Exactly. Okay, Divya, now let's pivot to the investor mindset. Okay. So many busy professionals struggle to take the first step. Now, what advice would you give someone with a high paying W-2 job but no passive income yet?
Yeah, that's a great question, Pramod. And I used to want to be one of those, like 6, 7 years ago, and I wish I had started sooner. So one of the things that you'll hear from all of us in this space is, I wish I started sooner. Now, few things that I would say is, yes, the fear is real. Yes, you could lose your money, but so is the money getting lost in stocks as well. So we always talk about stocks as like the fun money or something to start with. So do a couple things, right? Start out with something small, work with potentially even partners that you trust their judgment, you like the way they think, go to some of the real estate conferences. So one, find potential, a mentor who, so to say, that you feel comfortable with, you can ask good questions. Second, I would say, is go to real estate conferences. Third, of course, you can read books. I think all of us as technologists, we are very happy reading books and reading articles, sometimes then talking to people, but to our own demise, we should be doing all of it. But really figure out like what those look like, and then start small. Even work with somebody who is willing to, say, decrease the minimum investment. Most of these investments are 50,000. Ask and see if they'll let you in to try out first time and see how it goes on 25,000. And are they willing to let you in? So some of those can kind of give you an idea how to get started. But end of the day, it's fear, and fear needs to be conquered, right? If fear just stays there, you get stuck. So our goal should always be to get unstuck. And funny you mentioned that, because this is exactly what I wrote about today. I wrote about on LinkedIn my fear of going in deep water and how really I conquered it. And it was very difficult, but end of the day, it very much aligns with the fear we have with real estate. So figuring out, steps to be able to conquer it is really important.
Yeah, well said, Divya. I mean, taking small steps is the way to go, and not doing anything will not lead you to anywhere, right?
Yes,
And
absolutely.
the good thing with investments in this space is you could be a passive investor just by investing money and do nothing. And you don't need to manage the tenants or anybody, right?
Exactly. Yes, you called it. So for me, I would love to kind of share the fact I used to have a single family home. I used to manage it. There was a lot of effort. The tenants called me while I was at Disney with my kids, and that was not fun, right? Like, getting called and the garage door was not working. And of course, I'm in Florida in February, but in Minneapolis at that time, it was freezing. There's a lot of snow on the ground. The garage door does not open. And here I am on the phone trying to figure out, who do I call? Who is available immediately so that they can let their car out? And then helping them, how to open up the garage door manually. So that's just one example of things that I didn't want to manage anymore. And that's when I switched over and said, you know what, it's better to manage it passively and have a full-time team kind of managing some of that.
I mean, we have full-time day jobs, so don't need a second full-time day job managing
Exactly.
single-family homes. Yeah, that's interesting. Love the story. How do you stay up to date on market trends, whether it's real estate or other asset classes?
Yes, no, that's a good question. I think the couple things I do is I do like to read. So I think that kind of works out. All of us being in technology, we're good at reading. The second thing I would say is going to some of these meetups and conferences and understanding kind of where things are at. So I was just speaking at IMN last week, and we were talking about trends that are happening today in vacancy, rent growth, and also cap rates. So we had a lot of discussion. There was a lot of industry leaders there talking about it. So connecting with a few of these folks, and I know it's really hard to kind of go to some of these conferences, let's say weekly, but if you could even go to one a month and I think get started and just get comfortable, that'll get you a long way.
Okay, good. That was a nice pause there. We cut that one out. Love the answer, though. I need to get into more conferences. I feel like that's some of the best learnings when you get that group of experts together and you get to have those conversations, whether from the stage where you're just kind of absorbing as a listener or having conversations afterwards. That's great. I'm going to pivot for a little bit here. You're in an interesting position. You know, you're as a woman in both tech and real estate. These industries, they're traditionally dominated by men. What challenges have you faced and how did you overcome those?
I think we wouldn't have enough time for me to go through it all. Just kidding. I think things are changing. I will say that. I think things have been more positive than they were, I would say, a while ago. So I graduated from a class of 20 computer science majors. I was the only female in that class. So just to kind of tell you like how few computer science graduates were there, don't ask me how many years ago, but a little while ago. In, I would say, executive positions, I think that's still the case. I have been still the only female in some of those areas. And I would say the aspects that are challenging is the way I think or I may think as a female perspective sometimes could be different. And it is not bad different, it's just from a different perspective and point of view. So I think one of the things that we consistently need to work together in this space is how do we make sure the communication that's happening, even though it's coming from two different perspectives, we're actually reflecting what's important and what needs to be done better. So that's kind of what I would say is it tends to be a lot more communication differences from a perspective differences, but it's not challenges, it's just different perspective. So how do we really account for that? Similar thing in real estate. I actually think real estate in some ways is worse than technology is. I think technology has come a long way, but in real estate, there's still very few women. I led a women in real estate session actually last week as well. And we talked about some of these, but end of the day, it is about getting your point across and communicating so that we're able to share what's missing. And I say we, but like men and women, we just have different ways we run things. And I would say women tend to be a lot more cautious sometimes. So they want to go through all the detail before they'll say yes to something. I think it's a little bit different for men. But I also think it's culturally been different because men are required to be bold. They're required to be assertive in many situations. So really kind of talking to the people who are in your room and making sure you're building that good relationship with them.
Okay, Divya, given that you have good experience both in tech and real estate, what would you advise for some of our women listeners to this podcast who are looking to build financial freedom or leadership roles?
Yeah, that's great. Pramod, so I love that. If you're looking for a leadership role to reach out to me, happy to chat, happy to share, anything I can help you or share with you. From a real estate perspective, and even both tech and real estate, look for the right mentors. And I will caution you and just say, don't wait for just female role models. Yes, they are important, but end of the day, if you have an ally who's really supportive, who wants to work with you, wants to help you, men or women, regardless, in real estate or tech, talk to them, reach out. So even, listeners as you are, and you may know Wally or Pramod personally, reach out to them, talk to them. So end of the day, it is about finding somebody who wants to also support you. So that's kind of what I would say.
Yeah, thank you, Divya. And another question related to personal growth. What is your daily habit or routine that has made the biggest impact on your success?
Yeah, it's not related to technology or real estate, I would say, but it is more so working out. So for me, I think the biggest difference or shift I've seen is when I've consistently kind of taken care of my body and done something hard. Working out is one thing that only you can do. Like nobody else can help you lift a certain amount of weight. Nobody else can help you do, 20 burpees. You're doing it by yourself, right? Like no matter how much support I ask for, nobody else is doing it. And I think it instills that confidence that sometimes we all need to kind of move to that next step. So if there's one thing, I'm a big health proponent, if it means go for a walk every day or lift some heavy weights, whatever it is for you, like find that and do it consistently.
Love
Yeah,
it.
exactly. On a personal note, I do yoga, since the last 30 years, almost every day.
Wow.
But 2 weeks ago, after Wally had told me that he went to Canada for a big marathon, I was very impressed. And after hearing that he ran almost like for 20 hours, I got impressed. And since last week, I started running.
Awesome.
Wow.
Super
Yeah.
Wally,
cool.
what kind of marathon would not be 20 hours? So this has got to be
No,
ultra
it was
marathon?
it was an ultra marathon.
Oh my gosh.
Yeah, last runner standing. I won't go into all the details, but
I'm
it's.
bowing to you. I do not have desire to do ultra.
I've seen your Ragnar post, though. I know you do some trail running, so you get it. But yeah, the ultra's a different beast for sure.
Yes.
But
Yes.
it's like you said, it's part of that self-care, that you doing hard things and staying in shape, that really kind of helps keep your mind sharp and keeps you ready to tackle
And motivated.
life. And yeah, absolutely. Here's a fun question. If you could go back 10 years, what would you tell your younger self about either your career or investing in general?
So I will kind of share a couple tips with both. So if I could go back 10 years, I would say learn about investing a lot sooner and start investing and playing it with it yourself a lot sooner. And stop being so afraid of losing. I think I grew up really poor and I think it was hard. And then I consistently got jobs and promotions. So I started making some money, but it wasn't until much later that I kind of, instead of grabbing things so, tight and protecting it all, I kind of let it loose. Start investing sooner, even if you just start with some stocks and then you go into real estate or alternative assets, kind of start to do that sooner. From a technology perspective, I was too afraid to kind of reach out to the level beyond my direct level. So that is what I would say is set up those skip level meetings, set up those conversations with your leaders, and then that'll help you kind of get to the next level faster and give you a perspective. So those would be the two things in, both spaces.
Awesome. Those are great tips.
Yeah. And Divya, now we have reached to the quick fire round, which we ask these questions normally for each of our guests. So I will ask you 3 or 4 quick questions. So the first question is, Divya, So the first question is, what book do you recommend most to aspiring entrepreneurs?
Let's say Atomic Habits.
Love it.
Oh, well said. Nice.
James Clear, one of my favorites as well. What's one thing most people misunderstand about you?
Gosh.
Yeah, tough one.
Yeah.
Sometimes too friendly, but that's usually not the case. I'm not as extrovert as I may seem. I do need my quiet time. So I only schedule 3 hours of meetings a day, and then I have quiet time for the rest of the day.
Got it. Is it cash flow or appreciation if you had to pick only one?
I think it depends on I know this is a tough question. I think it depends on your situation. So if you don't have any other income coming, then cash flow. But if you have a W-2 coming, then appreciation is more important. So.
I like that answer. Okay. Morning person or night owl?
Oh, morning, 100%.
What is one small decision that changed the course of your life?
Starting my own company.
Cool. These are great
That was
answers.
good.
All right. So we're going to start wrapping things up. What's coming up next for your company, Ascending Avenue Investments? Do you guys have any big goals planned for 2025?
Yes, we are hoping for another investment acquisition for this year. So we have already acquired one, and we are at least hoping for one more, if not 2 more. So that is primary goal for Ascending Avenue. On a personal note, I'm taking my second summer off with my kids. So I'm very excited about that. This is something that I dreamed of for a long time, even as a corporate executive. So I'm looking forward to that, this summer as well.
Thank you. And are you doubling down on any specific markets or asset classes, or maybe even
Yes.
launching a fund?
Yes, we have primarily focused on Texas market, specifically Dallas. So continuing the DFW market, because again, it's still growing. I see it day in, day out, the amount of construction, the amount of people moving here. So it's very visible to me. The second market that we consistently are looking at is North Carolina as well. So there are parts of DFW that have gotten really expensive. So I also see inflow of people going to North Carolina, Charlotte market specifically. So that's another space we are looking at.
Yeah. Thank you, Divya, for sharing your journey and dropping us some serious wisdom today. How can our viewers learn more about you or reach you?
Yes, thank you. So reach out to me through my website, ascendingavenue.com. There is a contact us button. You can fill out information there. Otherwise, Like both Pramod and Wally said, I am active on LinkedIn. That is my jam. That's my group of people. Facebook is not something I ever got used to. So you can find me on LinkedIn as well.
Awesome. Divya, we appreciate your time today, and we'd love to have you back again if that works for you.
Yes, of course.
Awesome. For everyone who logged on, it's time to commit this episode to prod. And if you're listening, wondering how to get started, take Divya's advice, get educated, start small, focus on long-term freedom, and of course, subscribe to the podcast and follow us. Thanks.